Hello and welcome back to the channel. My name is Herve, and every other day on this channel I try to bring you crypto in the easiest way possible on the internet. If that is the type of content you find interesting, be sure to like this video and subscribe to the channel with your notifications on so that you don't get to miss any other value-packed video like this one. It's actually just going to be a short video on how I place take profits and stop losses with Fibonacci. So the way I go about this is that I actually look for retracements. Yeah, you look for a retracement or an extension. Now, this is something I've explained time and time again on the channel. So if you have been watching the predictive analysis videos, then you'd know this already. But I think I'm going to create a playlist. What do you guys think? Perhaps I should create a playlist only for Fibonacci stuff. That way, if I make short videos like this, I can just upload them to that playlist so that you find it easier. I think I should do that actually. So the idea is that when you see price going up like this, you need a general retracement to a Fibonacci level. That way you can assess and see that, hey, it could potentially go higher, or it's just going to plummet. Yeah, so you don't want to buy a green candle, or I don't have green candles here, but you don't want to buy when price is just going up. Remove yourself from this idea of will it still come back down? Price will always come back down. Yeah, because I know a lot of people are asking me over on Instagram and on many places that do you still think price is still going to come down? Do you think Bitcoin will go below 25k again? Do you think Solana will ever come back down below 40? And I'm like, why won't it? Price will always come back down. That's just it. The higher it goes, the harder it will fall. So when you see price going up like so, what you need to do is take your Fibonacci levels from the low to the top, like this. Now you go to price action and you see something that looks like so. Now if I want to give you every detail, it will be a very long video, so I'm just trying to compress everything. So when you see something that looks like so, you've been seeing higher highs and higher lows. You see a high, a higher high, another higher high, a low, a higher low, another higher low. So if you see price come back down below that higher low right here, that now is showing you that the trend to the upside may have ended. Now there is no guarantee that it has ended for sure, but it just shows you that the trend to the upside may have ended. In other future videos, we will go to explain how to even project where this top could be. We will go into other videos and talk about this. So when you see this low lower than this higher low right here, that is telling you that the trend to the upside may have ended. So you start to consider that this was the top. This candle close right here was the top, and this week was the highest point of that asset, and we may be coming back down to where? To a Fibonacci level. Now, why do we actually come back to a Fibonacci level is another very long topic, which if I want to explain, it will take maybe a 5-hour long video. So let's just go ahead. In other videos, we will explain that. So you take Fibonacci from the bottom right here to the top right here. Yeah, I hope you can see that. So you take from the bottom to the top where you think is the top. Yeah, you think is the top right here. The idea is to only want to enter this asset when we have a retracement back down to the 0.618 or the 0.786 Fibonacci level. So you have the 0.618 inside here. Let's just take it like so. You have the 0.618 right here, 0.618 to 0.65. This is the golden pocket. Some people believe that the golden pocket is actually the region between the 0.5 to 0.618, but I find that price mostly retraces here instead than here. So this is more risky because stop loss is down here. Even if you entered here, stop loss is still down here. That's why you want to enter at these lower levels, because they are closer to your stop loss. They allow you to have a higher risk to reward on that particular trade. So you want to enter at the 0.618 or 0.786 Fibonacci level. Now, as price is coming to the downside, yeah, some of the times you could just enter at the 0.618 and DCA at the 0.786. So you could have two entries in that trade. Yeah, sometimes I'll do it that way. But if I have more confluences to make me believe that we are still going to go to the downside, I will be of the idea that I only enter at the 0.786 Fibonacci level. Now, what I have noticed for Solana, particularly Solana, is that it likes to take liquidity at the 0.786. So the 0.618, you will have a bounce right there, but you mostly see Solana come again to the 0.786 Fibonacci level. This is something that I told you when Solana was somewhere around here. It did the same thing right here. It comes to the 0.618, drops down to the 0.786 Fibonacci level, moves back to the 0.618, consolidates right there, and explodes. That's what I've noticed with Solana. So we take from down here, if we take from down here to the top right here, you'd see the same price action. Now, when I did that video, it was actually on that was the daily time frame, if I remember correctly, because if we look at this on the daily time frame, it should be about the same thing. Yes, the daily time frame. So you'd see the same thing on the daily time frame for Solana. If you measure below here, it will probably give you this low at the golden pocket. Let's do that and see. Yes, it will give you that low at the golden pocket right here. So you see Solana coming and doing the same thing, yeah? It consolidates at the 0.618 as a lot of people start to buy right here. Solana nukes to the downside, moves back up, consolidates, and erupts to the upside like so. How do you place your stop loss right here? How do you put your stop loss? Your stop loss must be below the lowest candle close of an unretraced candle. So this candle right here has not been retraced. When we were performing the analysis, when I sent you that forecast, this candle was not retraced. So if you are taking a position at the 0.786 Fibonacci level, your stop loss must be below here. If price can go below that candle close, the chances of it going even lower are very high. So if it's going to go even lower, then there's no need for you to be in the trade, yeah? It should just take you out. So if you were taking this trade right here, your position would look like so. This is how your position would look like. Now, I tried to match up some levels with this other candle wick down here. So I placed my stop loss below that wick, this other candle wick right here, this wick. I placed my stop loss slightly below that wick, because coming below that really means that this thing wants to go right to the EMA right here, somewhere around $51. So this is how your position is going to look like. Now, where would your take profits be? Your take profits would be if you take your fib level, assuming that this is the bottom. Yeah, you're assuming that this is your bottom. You take your fib levels from the top like so, to the bottom right here. And so we can cancel these ones out like so, yeah? Now, you will see that the 0.5 Fibonacci, let's take that in yellow as well. Let's just put all of them in yellow so that you see clearly. So these would be your take profit levels. The first take profit will be the 0.382 on the move to the upside. Yeah, you could take, say, 15 to 20% of your profit right here. 0.5 will be, say, 50% of your profits, and the rest are the 0.618 right here. If you have some confluences to make you believe that this thing will go even higher, then you could perhaps leave a runner to continue the move to the upside. But in this particular scenario, this would be your ideal play. So your play is like this: price moves from here to the upside. You want to catch price at this retracement down here. You could dollar cost average right here. On some things like BTC, it can retrace right here and not come back down to this region. XRP as well can retrace from here and not come back down to the 0.786 Fibonacci level. But Solana, I have noticed that will mostly come down to the 0.786 Fibonacci level and continue to the upside. Now, you want to trade this move. This is the move that you want to trade, this move. And again, your stop loss must be below the lowest candle close. You must always find a candle that has not been retraced. So let's see if we can get some candles. Okay, so this candle right here has not been retraced yet. Yeah, this particular candle has not been retraced yet. So if you wanted to perhaps get in on a trade or something, you're taking from this low right here to this high right here, and then you're going in at the 0.786 here, 0.786 of this particular candle. Yeah, so every candle has its own Fibonacci levels, and you are either using a Fibonacci level as your entry point, or you're using a Fibonacci level as your invalidation point. For example, this other candle right here, this candle, this one, yeah, this particular candle. So you take from here to here. If Solana, if price can close a 2-hourly candle above this 0.786 Fibonacci level, then there is an increased chance that it goes even higher. So that is how you are dealing with price at any moment. Note that this one did not close above the 0.5. This particular candle right here, we have this candle right here showing us that price could continue even higher, and this is an inverted head and shoulders, if in case you did not notice already. This is the inverted head and shoulders, and we have this move to the upside showing that price could continue even higher. Yeah, but then it did not close above the 0.5, so you are already starting to suspect what's going to happen. If this particular one comes back to close below the 0.5, the chances are that price will continue to the downside instead of up. So you see how this is constantly guiding you into confirming a certain price move. Eventually, this would be, as we said, this will be your ideal take profit on the entire move to the upside. Your ideal take profit will be this golden pocket right here at 63. This is the reason why I told you guys the other day that if Solana can hold this zone, then the price will most likely reach $63. Now, does it mean that you go short at $63? Not necessarily, because we have seen that this thing likes to retrace at the 0.786 Fibonacci level. So there is a chance that it goes even as high as 65. Here we can see that it has closed above the 0.5, so chances are that it will still go up. However, these candles have not been retraced. You could see price come maybe like so and bounce off of here, wick down to here, and then continue the move to the upside like so. I hope you did enjoy the video. I hope you learned something from it. If there is any other questions or if you did not understand something, let me know in the comments. Until the next one, stay safe.